Hi, I'm Casey Healey from Central 21, and today I've got Nick Ball from Inovayte here to discuss. There's lots of talk about putting mortgages on hold and landlords looking at their mortgage. So ASICs have warned us in the real estate industry that we're not to provide financial or investment advice. So I thought I'd bring in the big guns today and chat with Nick about what it is. So
thanks, Casey. Happy to be here.
Thank you. So landlords have been told to speak with their banks. So what does that mean in relation to, is it you freeze your mortgage? What happens? Like, what do they do?
Yeah, okay. So I guess on the back of the crisis, most of Australia's banks have unveiled what is hardship packages, which are available to anyone that's affected by the COVID-19 crisis. What those packages really are, like they are being referred to, I guess, in the media as mortgage freezers. Essentially what they're allowing you to do as an individual is to put a hold on your principal portion of your repayment if you're on principal and interest repayments for a period between 3 to 6 months. So essentially, if you're the average borrower out there, what that means for you is you technically won't need to make any repayments for that 3 to 6 month period if the bank approves your application for hardship. During that period though, interest will continue to accrue on your loan. So that's probably the other aspect, is it's not a freeze, there's no total freeze to repayments. What they're doing is they're allowing you to stop making any repayments for a short period of time to help out.
So when they stop making you, or stop that repayment, do you still have to pay the interest principal, like the interest part of on the principal, or do they just put everything?
Not for that period. So you'll just see your loan balance grow over time.
Yep.
So a good example, I guess, is if you started right now with a $500,000 mortgage.
Yep.
At the end of the 3 month period, you're going to see your loan balance be at about $504,000 roughly.
Okay.
Depending on what interest rate you're on.
Yep.
So you're just going to be starting at the end of the period with a higher loan balance.
Okay. So does this affect someone's credit rating, or can it affect?
Luckily, we have got clarity around that, and anyone under the COVID-19 hardship programs will not have their credit ratings affected.
Okay.
So generally, yes, in an example where there is arrears on a loan, it would affect someone, but yeah, they've been told to classify this as non-arrears, and it's a special situation.
Fantastic. So when people talk about you've still got to pay the compounding interest, that's not really payable now.
No. So if you do choose to go down the pathway of accessing these hardship options, interest is calculated daily on most loans in Australia. So any interest that's added to your loan balance, obviously more interest will accrue on that. The example I've been using lately, just to give a bit of clarity there, is for a $500,000 loan. If you're on 3.5% interest, after 3 months, the compounding interest is probably about $22.
Okay.
So it's just, it's not a huge amount of money. Obviously you are ending that period at a higher loan balance altogether than you would have if you had made your minimum repayments. But yeah, the compounding interest is just that interest on top of interest.
Okay, perfect. So what are your suggestions? Is there any kind of cost saving people can look for during this time, or?
Absolutely. So I guess what we're suggesting is that you have the conversation, that you go and talk to your local mortgage broker or talk to your banks and understand what's available to you. Like everyone's situation is quite individual. No two are the same. We all have different jobs. We have different investment properties in different areas. So it's really important to put all your options on the table and understand what looks best for you. We've got a calculator that we're using for our clients that we're running through a few different scenarios just to show them what the outcomes are, whether they take different options. Because we're not going to sit here and tell anyone that this is the perfect answer. Like, you've really got to know yourself and be comfortable to do that, because obviously none of us know when this is going to end. So it's important just to take control. Fantastic.
And that calculator, is that available? Can we put that in a link, or?
Not at the moment, so we're working to get to that point, but we have it available to us. So if anyone wants to have a look at it and work through it, happy to do so with anyone.
Fantastic. And I can put your details in the links and send out to people.
Absolutely, that's no problems.
Fantastic. So I hope that answers a fair few of your questions in relation to mortgage freezes or holds during COVID-19. I'm Casey Healey. This is Nick Ball from Inovayte. Thanks for your time.